Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Barty. And how about YouTube? Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I please get a screen and audio? Well, good morning, everybody. Thanks for visiting the Trader Lab today. Appreciate you stopping by. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and there'll be several days this week that I will not be streaming, but I will let you know about that. And I appreciate you all coming by to visit the lab today. This stream's about integrating Bookmap order flow tools with auction market theory, using the volume profile in alignment with order flow in the intraday developing time frame. This is based on structured trades that's available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process you see here every day. In addition, the Trader Lab is a group of like-minded traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading, whether you've been at it a while or senior traders over 50 years. I have 45 years of trading, both professionally and out here with you, and also newer developing traders. It's not about the time you spend trading, it's about what you learn and how you use your time and what you can actually walk away from that's usable. And that's the key to what the Trader Lab is about. It's a community, and in this community, everyone brings their thing, if you will, and what they do, and then what we do together is collectively leverage that experience. And you might say that more leverage, just like in trading, can equal a lot more. So, and again, you're all invited. Trader Lab, and there is no cost for that. By the way, I am streaming from Costa Rica on a tin cannon string. The infrastructure here, well, let's just say sometimes offers some surprises. Power can go out when the sun is shining. You don't need a storm. It just doesn't matter. Monkeys swing on the internet cable, it goes down. So if I do go down, just so you know, I will come back. It takes a few minutes for everything to reset. So please be patient. Let's take care of business and let's get into our discussion and review for today. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get there, we'll talk. Also, if you're interested in the library of webinars and other materials, including 60 PDFs of structured trades, they're available to all of you at no cost. There's a link in the bottom of YouTube, and you can visit the Bookmap Discord Trader Lab community. And of course, there is no cost. So you're all invited. Consider it an invitation, and I would look forward to meeting you there. Incidentally, this is what the trades look like. Just a quick snapshot. These are PDFs I put together. Traders were asking me many years ago what I was doing, so I put these together. It's not meant to be a trading course. It is more about isolating behaviors and also structured trades, so you can actually see why and how they work. That's also available in the Bookmap Discord Trader Lab community, and it's really there for you to look at it, think about it, and potentially reverse engineer what you see here, as well as the Trader Lab community, which can help you put these pieces together. And, you know, again, it's really about you. It's not about me. You know, I'll do what I can to help you, but in the end, you have to do the work. And when it comes to trading, it's not really replicating what someone else does. It's about understanding what they do. And then if you can understand it, you can adjust it or modify it to your psychology or time frame and all of this. You know, we all think of time frames. Well, what's the right time frame? Isn't that a great question? Well, it's really a function of the rotations you operate in, and I call these fractals. So what is a fractal? It's not a time-based event. It's a rotational-based event. Rotations are created by the participants, and what the auction is really about is not trying to fit the behavior of the market into a box like based on time. It's based on the rotations. And what creates a rotation? It's very logical if you step back and think about it. It's buyers and sellers interacting. And if you want to think of it like, and we call it the auction, but let's just call it shopping. The thing about shopping is when you go to the store, the auction doesn't move much, you know. So you have a retail price in the store where there's a lot of volume. Buyers and sellers kind of agree, let's do business over here. You buy it, they sell it, everybody's happy. If the price gets too high, somebody might buy the product, but there'll be a lot less volume up at the high end of that product price. So it gets too high, even though the price is there, unless there's demand, it's just the sellers aren't selling the product. They're going to have to lower the price. Typically, it comes back towards retail. But suppose they put it on sale. Now the price might be below retail, and then the shoppers who come to the store are going to have demand. And then the sellers may go, wow, we got a lot of demand here. Let's start raising our price. And in the store, in a very longer term time frame, if you will, that's your rotation. In our time frame, our rotation could be seconds. So it's the same thing. It's just inside of itself. So fractals are multiple time frames. So Friday, and I pointed this out in the Trader Lab over the weekend. I said, guys, go back to Friday. What did it say? Now, the thing about the auction is, now I don't use indicators, and it doesn't mean that you can't use an indicator. I've got nothing against them, except the result and impact it has on retail traders. That I have an issue with because we kind of leave the translation to math-based price-related outputs to tell us something. Now, that's all great conceptually, but have you ever opened your trading toolbox and see 100, 200 indicators in there? Have you ever asked yourself why there are so many? The reason, in my opinion, is all of them work some of the times, none of them work all of the time, and we go on the quest. You know, it's like looking for the Holy Grail, which it really is. What's the right number of indicators or specific indicators and number of time frames and all of this? Somehow it's like a snowball. You put it all together, and now you have an ATM in the basement. I'm going to suggest it doesn't work that way. Otherwise, you wouldn't have 200 indicators in your trading toolbox. Why would you need so many? Because it's the same thing in derivatives, and the reason there's more and more indicators is because maybe they don't work on a consistent basis. So what can work? Well, and what I found after doing that for years in all different derivatives and all, now this is just me, I kept waking up in the same place. I call it Trader Groundhog Day because anybody can have winning trades. Gamblers certainly win hands at the casino. Anybody can put a bunch of indicators together, curve fit them, and then have winners the next day or next week. But over time, what happens with that process? It continually, unless of course you're an exception, breaks down. So you're always chasing the market from behind. You're using what happened whenever, last week, last month, whatever it is, to, quote, predict what will happen in the future. Is it possible that doesn't work? Is it possible that the inputs that come into the market and the participant behavior is always random because the things that cause pricing are always changing? So what creates pricing? Well, inputs, economic reports, somebody trips over the cord at the CME, participants interact, and rotations. If the market goes down, it can then go up. That's the fractal. So if I get sellers here at the RTH Open, there might be buy stops up here. So if I get my sellers and I get early sellers, is it possible there will be buyers there? And if I come back around, can that be the catalyst for a rotation that goes up on the buy stops? It all starts there. Are you guys tracking? So now let's take a look at the RTH Open. Now Friday, there's actually Sunday in the Trader Lab. My goal in Trader Lab is not to call trades. It's a waste of time. My goal in the Trader Lab is to help traders understand market mechanics. How does it work? Why does it do what it does? So what happened on Friday? We had a squeeze on Friday. We took out Thursday's high, right? fact, let's go take a look at this very quickly. I'm going to drag something over here because the market doesn't operate in a vacuum. So this was Thursday. Now, you notice we had the Acapulco cliff dive on Wednesday, and then I posted in TraderLab, and if you guys follow the stream, I think that's Friday, Thursday, yeah, for Thursday, to anticipate a test of this low or an inside day. We got an inside day. So what is an inside day? It's kind of like a standoff, yet we closed lower. So what does that tell us? Let's get logical together here. Shorts are in the market here. We got new shorts in the market here, but we did not take out this low. So what might happen to these guys and these guys? It's called a short squeeze. If you were in TraderLab, you would understand this. Now, here's another piece. We opened and I was looking for a test of this low on this day. We got it on this day. Once we got under this low, what do we know? Shorts here, and in the morning, shorts here. What does that create? Short squeeze. So who do we squeeze? We squeeze these guys out. Thanks for playing. Broker sends you a gift basket. And then up into here. Now, how far it goes, that's part of the magic. We don't know. It's a short squeeze. However, on Friday, we had a very interesting event. We have something called the developing volume point of control, which is the highest, remember shopping, the highest retail price. It was up at the high going into the close, highest volume. And then going into the close, shortly before that, it shifted down. So we had a wick, which means shorts got squeezed out and then we came back down. Well, the fact we came down with a wick and we closed inside of this range and our highest volume, remember retail, was here. That suggested then the longs in here could get thrown under the bus this morning. So coming in this morning, the plan was shorts. Does that make sense? This is part of what having a trade plan is about. It's also understanding something called context. And most traders have no idea what that is. And it's another way, another term to suggest market mechanics. How does the market work? Why does it do what it does? How can you get in alignment with it? This is TraderLab. And having structured trades and trade plans that are prepared prior to the market open. And the goal is not to predict. We can't do that. The goal is to align and have a sequence of processes. And it goes like this. If this, then that. If not, then what? So if we squeezed everybody out on Friday and we still have longs in the market, what might happen today? Now, let's take a look. We opened. Now, the reason I'm spending time, this is what you do in TraderLab before you put your first trade on. It's called a trade plan. Do you have a trade plan or you're just going to play a video game? Now, that's fine, but I always suggest if you're going to gamble, go to the casinos, get the cocktail and the ticket to the buffet, because this is not gambling. This is business. If you're interested in the business of trading, then come to TraderLab. I think you might find